Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting episode of Stock Options Hero. Let's jump into it. So, as always, I like to start off looking at SPY. And remember that support and resistance levels are an area, not an exact price level. So, people oftentimes forget that it's not exact. See, especially if you draw from the wick or the body of the candle. So, because it looked like it's running a little higher, meaning SPY, I'm going to draw it from the wick instead of the body. Now, if it closes significantly above resistance on strong volume, then we'll be in a little bit of trouble being short the market, right? So hopefully that doesn't happen, but definitely something to keep your eye on. So, not worried yet, as I'm pretty confident will be range bound and will most likely fail to the bottom side, or revert, well, not reverse, but continue the downward trend. So, excuse me. Okay, so I never created a stop for FSLY. So We took in $1.68, paid 10, so net credit was $1.58, 79 cents. Yeah. So let's go ahead and just put it for 50 cents. So 79 cents would be 50% of our original net credit. So it actually worked out pretty well that I spaced it and we actually got a little bit more out of the trade that we normally would. So, nice little return on FSLY. It just executed. So, we locked in that profit, even though we had to pay a little bit to get out. I like to close the exposure, and we were way up on that trade. So let's review our net lick is 102,538, cash and sweep 107,527. Once again, this is not a get rich quick scheme. This is a get rich slowly scheme, or strategy, I prefer to call it. So, depending on your size of the account, you could use this strategy to either supplement or replace your full-time income. So, definitely, I wouldn't quit your day job until you're consistently profitable and you have a sizable nest egg saved up that you could live on. But this is probably one of my favorite option strategies of all time. Okay, so this is FSLY, and this is a good example of the power of this strategy, right? So I think we got in on the 31st or April 3rd, and it pretty much, went down a little bit, but all in all, it channeled sideways, and we still banked $500 profit on it. So the only way we would have lost money is if it would have ran up to the upside significantly in a short period of time. So, yeah. Pretty happy with that trade. Why don't we run a scan and see what is out there? Another thing I wanted to bring up in today's video is, hold on, let me create the watch list for 12. So I've mentioned the 1% requirement or maximum investment per trade. So because our net lick is 102,564, we could put on a $1,025 trade to use 1% of the account. So, and then also you always want to have a cash cushion to land on should the market pull the rug out from under you. So some people say 50% in cash. However, we are using credit spreads with an insurance leg. So personally, I like a 70-30, or invest 70% of the account and keep 30% in cash. So using that ratio, we still have $33,000 to spend. But once we get down to $30,000 in cash, or 30% of our net lick, then we stop trading until our cash balance goes up to place more trades, or most likely our option positions expire, hopefully out of the money. So let's look at today's potential candidates. Okay, we're in that. So if you go, I forget what video it was in, but KO, I think we got in right around this area. So it's been channeling sideways. Let's see how our KOLD position is doing. So we're down 150 on the day, but overall, we're flat. Okay, so that's the power of theta. Every day, that option premium is eroding by 21 cents. So as long as KOLD trades below 90, which I think there's a pretty good chance, and Probo TM is saying 71% chance of expiring out of the money, I give it higher than that. But even if it channels sideways, we're still going to get max profit. The only way we would lose money is if it closes a penny in the money, so $90.01 on expiration. We still have 37 days. Right, so plenty of time for the trade to go even more in our direction. The thing that concerns me the most is the strong upward trend KOLD has been in for the last 12 months. So I was hesitant about getting into this, but let's see what it will do. So to get out, I have a stop at 54.45. So we'll just keep an eye on it. Mara. See, always look how the underlying has interacted with the LRC channels. All right, so back here just went very strong rally from $5 up to 18. So, yeah, I'm going to pass on that for now. Here we go, Riot. Yeah, so I like this. I like it a lot. So let's see, 14 or 15 strike. Yeah, let's do the 15 and the 20. 61 cent credit. That's a nice ROC. So take 61, divide 166, 36.74 ROC. Oh yeah. Definitely getting good return on our capital. And the 15 has a 75% OTM. I would love to do more than 1,000, but my trading rules don't allow for it, and I'm trying to be a good example for you, my loyal subscriber. So, looks like we'll do 6 contracts. Once again, before I pull the trigger, I'd just like to go back to the chart, see where the 15 strike level is. With this candle formation, this is a bearish reversal pattern. Shooting star, I believe. I'm a little rusty on my candlestick patterns, but I know when I see certain patterns, it's a reversal, and that is one of them. Pretty accurate from previous experience. So, let's do this. I like this trade. I'm going to do 60 cents. So 360, 36%. That is fantastic. I'll take this trade every day, all day long. So when creating your watch list, always start with the highest implied volatility stocks and work your way down. So this is a therapeutic company, upward trend, very volatile. High IV means options are expensive. Let's see. So yeah, we're close to the 52-week high. Just seeing if the risk to reward ratio is sufficient. Maybe. It's juicy enough. 60 divided by 242, 24.8% ROC. 25 strike up here above the top LRC. The DMI is at a high level crossing down. RSI is already crossed down. Stochastic is above the 70. MACD is at a decent level. Yeah, all things considered, I'll take the chance. And because it's a pharmaceutical, I'll trade smaller than I normally would. So still make 180 and risk 727. Okay, moving on. Position sizing is key. If you play poker or Texas Hold'em, you'll know that pushing all in unless you've got the nuts or the best hand possible is a terrible idea. Once you're out of chips, you're out of the game. But if you risk 1% of your chip stack, you'll stay in the game long term. Or should, unless you have really bad luck. Okay, so... Okay, I like the IV, like stochastic, RSI. Let's see. Yeah, not liquid. I could tell it's not very liquid just looking at the candles. So, not surprised by no option liquidity on it. Viking. Yeah, this one's not going to be very liquid either. Let's see, 20. No. I mean, it does look like it's kind of double topping. But I'm going to pass. It might work, but my gut's telling me no. FSLY. This is one we just closed today for a nice profit. I've actually traded this one pretty often this year. It's been a good underlying for me. So we'll keep an eye on it. I mean, we could sell another 20. Maybe go even further out. Yeah. Not going to be greedy. We'll leave FSLY alone for a bit. Might be a little mad at us right now. Let us forget about giving us $500 and come back to it later. So 55. I like MACD, stochastic, yeah. DMI, RSI, JNUG, yeah, one of the junior gold mining ETFs. Let's see, what's the 60? 60, 65. Yeah, like 14, 15% or so. Yeah, 13.6. I'll do it. Let's roll the dice. So risk 880 to make 120. And we're doing the 60 strike. Feel good. I like that. Especially with the doji that's forming today. Or the hanging man. I need to brush up on my candlestick patterns. RBLX. It's a crypto stock. Let's see, what about a 55? 5560. So 25 delta, 82 prob OTM. Once again, the 55 is up here above the 52-week high. Let's see what kind of ROC we get. So 73 divide 427, 17%. Pretty solid. 427, we can do 2 contracts. Risk 854 to make 146. Take it. Okay. Yeah. It's already trading at the mean, so we're too late for that one. Dash. Yeah, it's not doing so. Oh, we're already in it. I see my sell, or sorry, buy to close order hanging out. Let's move my cursor out of the way. Huh. Yeah. Looks like it's going to break down. Oh, we're already in it. That's good. Our trade is going to get out of this trade within the next few days, most likely. Okay. Pacific Biosciences. Too close to the mean. Pass. TTD. No. Tesla. The thing about Tesla is it can move very fast against you, so always be super conservative with Tesla. Oh, are we in this? No. Okay, so what is a 300 strike? 99% OTM. Oh yeah, that sounds good. What kind of credit can we get? Risk 500 to make $3. Yeah, that won't. After commissions, we'll get $1.70. No. So 85. So also look at the volume column. You want your option to be as liquid as possible. So because there's 1,000, I mean, we could do the 220 with 941 volume or the 225 with 1,000. Let's just see what kind of credit we can get. So 10%, the 225. Yeah, it's above this double top area. Not super stoked, so we'll trade half as big as normal. So we'll just put on a small trade. Now, if it were like back here, or like over here, then maybe, but we're a little late on the trade. Warner Brothers Discovery. Looks like it's channeling sideways, showing some weakness. Was this 17 or 18? 1750. 20. Yeah. Right close to 15%. 87%, 88 rounding percent OTM, 1750s up here. It's in the downward trend. So, what? 50. With technical analysis, I'd probably give this like a 95% OTM. Very unlikely. So 10% for high probability trade is worth it, in my humble opinion. So let's see. Downward trend, failed off the top LRC. Candles tell me it's a lower liquidity stock. Let's see. Now we're already in it at the 100. Sweet. Moving on. Remember, do not double up your trades. So if you already have an open position, don't double your position, because then if one trade goes wrong, you're doubling your losses. One of the things you want to do is diversify and spread out your risk, not increase your risk. No matter how well you think the trade will go. See, like right here, we're in it, and it's looking like it's channeling sideways with the bearish slant. I mean, yeah, just don't do it. You'll thank me in the long run. But I know many of you will ignore that tidbit and regret it. So sometimes we have to learn the hard way. Myself included. I've violated that rule a few times and it has bitten me. So I do speak from experience. Downward trend. MACD stochastic, DMI heading lower. Is there a 20? Let's try the, oh. Yeah. That's not good. Yeah, not even close. So, okay. Petrol. So, gas stock. Maybe. We'll see. Zoom in. Downward trend on the LRC. Let's see what kind of. Oh, nothing. Yeah, not worth it. Not worth it. Yeah, sorry. I wish there were a few more trades that were ready. But, no. So, sorry. The reason I don't like the upward trend and I don't like the DMI heading lower. Now, that's actually what you want. You want the DMI to head lower when you're thinking about putting on a trade. I guess I don't like the upward trend, but it's not shy about touching the top LRC either. But the MACD is near the reversal level from previous reversals. So, okay, fine, we'll see. So 50, 55, 84%. Yeah, barely 10%. My gut's telling me no, sorry. Yeah, I know that's not very scientific, but you gotta listen to your gut. If it's a tie on whether or not I should put the trade on, my gut's telling me not to, that's my tiebreaker and I won't place the trade. All right, so one thing we haven't done is look through working orders. So because we use GTC orders, sometimes our order will sit out there for a few days before it fills, right? So look at a few days back. So April 10th, we wanted an 81-cent credit. Now it's going for 43, so I'm just going to cancel that. This one is trading half of the credit we wanted, so I'm going to cancel that. We wanted a 15, it's trading at a 20 cent. So yeah, that should have filled. So we'll leave that. It's probably just not very liquid. Now with the paper trading platform, it can be a little wonky sometimes on the pricing. So Yeah. So I just canceled the ones that were well below the credit, that we wanted. So here's some that we placed back on the 3rd, 4th, and 5th, and it says to open. So let's cancel that. And this is freeing up some capital for us to take on a different / hopefully better trade. So, and yeah. So our option buying power should have been going up as we were canceling those open orders. So, okay. So that's it for today. Thanks for watching. Please make sure you like, share, and subscribe. And I will see you in our next video. Thanks.